presentation for you. Another partner, another week, another solution for you to learn. Mr. Joel Slatus is back with us. He was here yesterday. Joel, can you hear me?
Yes, I can hear you.
Awesome. And as promised, we have a webinar for the audience here. We are live on Zoom. We're also live on Facebook, LinkedIn, YouTube, Twitter, various platforms. So if you have any comments throughout this presentation, type them into the comment box and we'll be sure to get you those answers. But today's topic is best practices in time tracking for payroll, tricks of the time tracking gurus. And this topic relates a lot to our members because our members work with a lot of construction contractors, landscapers, a lot of field services, and we always get the same question, how do we track the workforce? How do we automate all these different operations? So we always when we find new solutions, like we met Joel and Lindsay back in San Jose in November, we're like, hey, first thing we think of, let's do a Facebook Live and let's introduce you guys. And then from there, we build our partnership. But anyways, with that said, Joel, take it away.
Okay, well, thank you, first of all, for having us. We've got a 30-minute webinar here and a lot of information to cover. So we'll try to get through it kind of quickly. And I'll try to keep my eye on my stopwatch over here so that I don't go over for anyone.
I mean, if you go a little bit, it's fine. It's tax season, so 30, 35, 40, it's all good.
Okay, sounds good. Also, if anyone has any questions, feel free to bring it up. This is mostly an anecdotal webinar. We're going to talk about stuff that I've been the CEO of timesheets.com for over 15 years now. And during that time, we've run across all kinds of situations with customers on how they're going about tracking their time and how we have gone about solving problems for them. And so I've taken that sort of information, tried to compile all the ideas that I've had into a webinar, and this webinar is the result of that thought process and those ideas. So hopefully it'll be a good webinar. It's actually the first time I'm giving it. So if you guys have any feedback for me at the end, that would be really appreciated. All right, so that being said, best practices in time tracking for payroll. So as you know, my name is Joel Slatus. I'm the CEO of timesheets.com. And as I mentioned, I've been at the helm of timesheets.com for over 15 years, but I have 20 years in web development. I started out in 1998 building websites as a sole proprietor entrepreneur and learning to, I really started on the ground floor. And at 1998, there was really nowhere else to start but the ground floor because web technology had really not been developed to a great extent at that point. And a few years later, I started Timesheets, which would be in 2004. And from then on, I've been doing timesheets. And that's what I've been learning and eating and breathing and sleeping is timesheets. And so that's all I think about these days. I've worked with thousands of clients and I've helped them. I still take phone calls from time to time. If it rings past the sales and support group, I will jump on the phone and take a call. And I still get to talk to clients. Talked to one this morning, had an interesting anecdote with her about her time tracking, specifically her time off tracking. So that was kind of interesting. Now, what you'll learn today is the don'ts of time tracking. You'll also learn the don'ts of time off tracking. And finally, we'll talk about how and why to automate and how that all ties together with the don'ts. So that's what we're going to cover. So that being said, a little bit of background. Now, as CPAs, most of you know that every business owner and entrepreneur is sort of on their own when they start their business. There is no class that you can take that says, like a general business class that the world gives, that says, here's how you start a business and here's everything you need to know. I mean, we all have to sort of invent things. And of course, necessity is the mother of invention. So we create policies and processes around our specific needs. But because we all need to invent our own processes, entrepreneurs in general don't know what labor rules and laws apply to them. And there's no manual that says this one applies to you and this one doesn't, or go here to look this up and go here to look that up. We have, as an example, employees in numerous states and even a couple of different countries. And where do you go to find those laws and rules? So most entrepreneurs don't know the answer to that question. They also don't know what work policies to set up. which ones are applicable to their business, and they don't know which time off policies to set up or how to set up those policies. And so those are the kinds of questions with respect to time tracking that every employer faces, every entrepreneur faces as they start their business, or even if they take over a business and they want to make changes. And so as a consequence, and that's just for starters, by the way, there's other stuff. So as a consequence, bosses often set up employment procedures and policies that are not great, right? First of all, they're not in anyone's best interest. They're not in the employer's best interest because they're setting up a policy or a group of policies that are not necessarily what they need to be setting up for their business. Maybe they're overly cumbersome, or maybe they're not going far enough and they leave the maybe they leave the bosses exposed to problems that they themselves create, like if they're not following proper overtime rules, for instance. So those are the kinds of things they could do that are wrong. They cost money if they set up bad policies, and they reduce the efficiency of the business. So if you're not setting up the right policies and procedures for your business, of course, you're going to end up with those kinds of problems. And finally, a bad process could end up annoying your employees. I mean, there's a human cost to that. If you have bad policy, like if your time off policy doesn't make any sense and it's, just a bad policy, and employees have worked at other companies that have good policies, it's going to end up annoying them. You want to have the best policies that you can. So that's the consequence of not setting up good policy. Now, I always like to say there's no such thing as a free lunch. And I use this sort of anecdote as an example of the kinds of bad policies and procedures that companies set up. So I will tell you a million times since I've set up my business, when I've talked to clients who have called us and said, I'd like to set up your software, timesheets.com, so that it works with my business, and I wanted to do this. And the free lunch is a great example, because a lot of times employers are trying to be nice to their employees. They're these, big-hearted people, and they don't want to just run their business. They also want to take care of the people that work for them. But that can end up, in some cases, causing problems with the bad policy, and the free lunch is a great example of that. So what do I mean by free lunch? An employer will call up, and they'll say, and this has happened, like I said, a million times, an employer will call up and they'll say, I'd like to give my employees free lunch. So in other words, I want them to clock in at 8 in the morning. I'm going to give them a free lunch, let's say from 12 to 12:30. They don't have to clock out. I'm just going to take care of that. And then they can clock out at 5 o'clock, and it makes everything simple, and I buy their lunch. Well, that actually ends up being a problem. If you do that, you shouldn't do that. Why? Well, first of all, you're paying employees for time they didn't actually work, which essentially defeats the purpose of tracking accurate time. You have inaccurate documentation after that. So you're going to have time worked on the clock that they didn't actually work. So now your documentation is inaccurate. Also, you run the risk of having the appearance of overtime when none is actually worked, which means that you now have to do calculations and figure things out. And maybe one day, if you ever have to defend yourself in court, it's going to say that the employee was owed overtime when in reality they were not. Lunches that are taken that are longer than the 12 half hour that you're actually giving them can be a source of frustration. So you're doing a great thing as an employer, giving your employee an extra half hour for lunch, or a free half hour, I should say, for lunch, where you're going to pay them for that. But what if your employees routinely take 35 minutes? After a while, that may end up annoying you. 5 minutes a day adds up. We'll talk about that later, but 5 minutes a day can add up to a lot. So if you give them a free lunch and then they take longer time than they're supposed to, then that could end up being a source of frustration on your side. Also, if you give employees something that's sort of not normal, not within the scope of what their work should be, you could end up, in certain cases, producing a feeling within your employee population of entitlement. And employees that feel entitled are not really good for anyone. That's not in the employee's best interest and not in your best interest. So you definitely want to avoid giving employees a feeling of entitlement for stuff that they're not normally supposed to get. So these are all the things that make a free lunch not really a free lunch, and why it sort of ends up being a bad practice. The solution, by the way, in case you're wondering, and what we always tell employers who are doing that, is to stop doing it and instead calculate, if you're giving them a free lunch and it's a half an hour and that's 5 days a week, you're really giving them a small raise in effect. That's the effect of what you're actually doing. And so that's 2.5 hours of extra pay that they're getting a week. So what we do is we say, look, go back to your employees, stop giving them a free lunch. Tell them you're not going to give them a free lunch anymore, but everybody's going to get a small raise that basically equals the equivalent. So it's a sort of 6 to 1, half a dozen to the other kind of thing. But now they're going to clock out for lunch, and now you're going to get accurate time of when they come and go, and you basically simplify your process, and at the same time you remove all these problems. Okay, so that's a good example. So now that we've gone through that as an example, let's talk about some problems that companies can avoid that are similar to that. So we've already talked about free lunches. And by the way, that boils into the automatic lunch deduction, which is kind of the same thing as a free lunch. This is slightly different, though, in practice. An automatic lunch deduction is they work from 8 to 5, and then you just deduct a half an hour. So in that case, you're not actually giving them a free lunch. You're just deducting 30 minutes from their time at the end of the day. So it's not a free lunch. They just have 30 minutes deducted. A lot of companies come to us, they want to do that. As a practice, we advise against it. Don't do that. Stop doing that if you're doing that. The reason is because, again, what if the employee's taking 35-minute lunch? You're not getting accurate time that way. You also don't know what time they came and what time they left. And so you're trying to do something nice and something simple and something easy, but in the end, it can definitely end up backfiring on you. I'm just checking the time if I look over here, guys. It can end up backfiring on you. So we say don't use the automatic lunch deduction. Our service timesheets, by the way, and I'll refer to it from time to time as an example, we do have that feature, but we tell people not to use it. All right, next on our list of don'ts is don't overcomplicate your pay scales. If you can get away from that, some companies can't, right? An example would be one that we run into from time to time would be like a union shop, right? Where you've got somebody who drives a forklift part of the time and somebody who drives a truck the rest of the time, and you have to pay different pay scales. And we can handle that as a company, and some services can as well. If you don't need to do that, and you're doing it because you want to and you want to pay extra, or there's some other reason that you want to do it, but you don't have to, see if you can figure out a way to get away from doing that. It's best to come up with a cost average and just pay one rate and just do it like that. So if our advice is, if you can get away from using complicated pay scales, it's always best not to use those. Next, don't overcomplicate your overtime policy, but definitely pay overtime if you owe it. So for example, and this is something, again, that we run into all the time. And as CPAs, you guys probably run into this with your client accounts all the time, where people want to pay, they want to get away from, they want to pay overtime in cases where they're not supposed to. For instance, we've had a number of employers call us and they say, well, we want to pay overtime if anyone works on a Saturday, right? And sometimes, again, you can't get away from it. One good example of when you have to do it is when Saturday is an undesirable day, or when the workload on Saturday is extremely high or something like that. You have to give something to the employees. A lot of companies turn to overtime. We recommend against overtime and instead recommend maybe giving them a different, a bonus every time they work on a Saturday, because you don't want to get into the business of calculating overtime and calling something overtime when it's not actually overtime. Stick to government regulations for overtime. If you call something overtime, then that takes on all kinds of connotations that you do not intend. It's better to just give a bonus for that. But like I said, definitely pay overtime. A lot of employers they like to say, oh, well, our employees aren't authorized for overtime, so as a consequence, we're just not going to calculate it. We're not going to pay it. That's a bad practice too. It'll get you in trouble if anyone ever decides to see you. Definitely pay the overtime. Don't manipulate week start to avoid paying overtime, and don't track time in hours and minutes. I just kind of lop these together because they're simple ones to understand. QuickBooks is one of these companies a lot of you guys probably use. They like to track, they built their software back in like the 80s, I think, and back then everybody was calculating time in hours and minutes, and it complicates things. If you can track time in hours and immediately convert to decimals, that's always a good practice. And QuickBooks does have a setting for that. If you're doing it by yourself, always good to convert immediately to decimals. You don't pay people in minutes, you pay in hundredths of an hour. Next, don't round numbers. A lot of companies still love to round numbers, and it can create problems. Back before everyone tracked time with computers, rounding numbers made a lot of sense. And so a lot of companies have these if you have a client, for instance, who's been around for 30 years or longer, maybe they're rounding numbers. And if you ask them, why are you doing this? A lot of them won't have a good answer. If you can get them away from rounding numbers, that's great, because employees can learn how to manipulate those rounded numbers so that it works to their benefit. And so it's not a great practice, and because computers can add everything up for you, you don't necessarily need to do it. It used to be, before computers, people rounded numbers because it made things easy. So if you can get away from rounding numbers, that's always a good practice. Next, don't modify employee timesheets on their behalf. Always have employees modify their own timesheets, and then you do approvals. And if you can find a system like that does that, Timesheets does that, then you're definitely better off, because that's a great way to protect yourself in court. The employee makes the request, you make you approve that request. If you're not using an automated system like ours, for instance, then at least have the employee submit that request to you in writing so that you're definitely getting a record of it. Okay, so that's just a good process. Next, don't estimate employee hours for payroll. This is a huge one, and I'm sure you guys are nodding your heads in agreement with me. If you're a CPA and you work with clients who do this, a lot of entrepreneurs and business owners are very what's the word? OCD, right? They like to pay on the 15th through the 15th. And I'm the same way. I don't do it, but I can understand it. But in order to pay an employee on the 15th through the 15th, and especially if you're using an external payroll company like, a Sure Payroll or a Paychex or an ADP, you have to get those hours to them on the 12th to pay on the 15th or sometime around the 12th. And in order to do that, you have to estimate those payroll numbers. So you definitely don't want to be estimating, because, obviously if you estimate, you're almost never going to be right. You're going to be a little high or you're going to be a little low. If you're low, you might owe the employer on the next check. If you're high, you've overpaid them, and now you have to take money away on the next check, or you have to eat the difference. So just get over the fact that you have to, submit that data on the 12th and stop estimating. Just get away from that practice. We advise people all the time to get away from the practice. It's a bad practice. Don't do it. Okay, next. It's not a great practice to offer comp time in lieu of overtime. One big pitfall that people use is they think they can do a 1-for-1. So in other words, if you work 5 hours of overtime, the boss says, well, look, I'll give you 5 hours of comp time and you can just take it as time off whenever you want. But the problem is you owe that time at a 1 to 1.5 ratio. In other words, if there's 5 hours of overtime and you want to give them comp time, you better give them 7.5 hours. So it's a good idea just not to do it. You're better off just paying the overtime. It keeps you out of trouble. You don't end up having to do complicated math. And if you ever get called out onto the carpet in some labor board dispute, you won't have to worry about coming up with all kinds of paperwork to justify that you actually gave them the right amount. So it's a bad practice. And if you can get away from doing it, then don't do it. So, honestly, these are just guidelines on best practices. These are not hard and fast rules. They're not going to apply to all of you or all of your clients' businesses, but these are good things to just sort of keep in mind when you're running your business. If you can get away from doing all of these things, then you'll probably run a tighter ship, or you'll help your clients run a tighter ship. I think that's all the don'ts. Oh, I forgot one. There's one more. Don't neglect your responsibilities. Basically, sorry, I forgot about this last one. Essentially, know the law, know what you're supposed to do, and make sure that you do all those things. If you are not aware of some policy or procedure you need to follow, then I suggest you hire an HR consultant. There's plenty of good ones. Here in California, we work with some we can recommend. If you have any questions and you want to talk to a professional, then you can ask us and we can make a recommendation. We have clients who use them all over the country, but definitely know your responsibilities and know how to stay on top of those, and that'll keep you out of trouble with Johnny Law. All right, so now we can move on to problems that companies run into tracking time off. The first one is, and let me just check the time here. What we want to do is we want to keep you out of trouble with your time off policies, and companies have tons of time off policies that are not in their best interest. The first one is don't use 50 different kinds of time off, and that's hyperbole, of course, but we've run into companies where they give sick time, they give vacation time, they give paid time off, they give 2 personal days that they can use whenever they want, and then they have myriad of other types of time off type of tracking. It's not necessary. In some states you have to give sick time. What you can do a lot of the time is bake that into a broader PTO and just have a single time. If you can get it down to one type of time off, they're not at work, you're going to pay them for that time. For most companies, a single type of time off is really all that companies need. So as a piece of advice, what we normally try to tell customers is, if you're setting up a new company, or if you're the boss and have the ability to change your internal policy, it's a good idea to just set it up as simple as possible. It does not need to be complex. It doesn't need to be complicated. Most of these older companies don't know that, and a lot of them have policies that are not consistent with that philosophy. They have all these different kinds of time off. So if you can simplify, simplify. Next, don't track time off in more than one system. A lot of you have seen this as well. If you have, what this means is, suppose you're using an Excel spreadsheet, but you also have your payroll company like Sure, Paychex, or ADP, or whoever you're using, they're tracking time off. The problem with tracking in two different systems is, you can have two different balances for an employee, and they're different, but they're both correct, right? Because there's rounding issues. In other words, maybe the pay loss or whoever you might be using, maybe their system rounds numbers to the fifth decimal place, and the system that you use locally, you're only rounding to 2 decimals, because that makes certainly much more sense than 5. If you round if you're going to track time off, make sure to just track it in one place. Then you're never going to have to go back and do complicated math and spend an hour figuring out how come you're off by some tiny amount, so that you can answer the employee's question. Well, it says 10.56 here and 10.53 here. How come that's different? Nobody wants to spend an hour calculating why that 0.03 is different. So track time in one place. Next, don't track time off when employees aren't being paid. We have a lot of customers who say, well, they're not in today, but I'd like to track that time anyway. And you will say, why? Why would you like to track that time? It's essentially a day off, right? They're not here and they're not getting paid. So this is a simple one. If you can avoid doing that, avoid doing it. Ask yourself, why am I tracking that? Have I ever actually used that data for anything? And if the answer is, if you don't have good answers for those two questions, then just stop doing it. It simplifies your life. You won't need to track that anymore, and it makes your data collection and process much simpler. So that's a good thing that you can sort of ask yourself, ask your clients to ask themselves, why are they doing that if they're doing that? Don't zero out balances in January. A lot of companies misunderstand the use it or lose it time tracking scenario, right? And so some of them think that means zeroing out time in January. Now, you can do that if you want. There's nothing wrong with it. But, well, I wouldn't say there's nothing wrong with it. There's nothing illegal about it. You can do it if you want. But it's not really the greatest policy. Some companies think you're supposed to zero things out. Well, here's the problem with zero things out in January. That means that you're basically backloading all of everyone's time off in the company. In other words, if somebody wants to take a vacation in January, they're never going to be able to, because they have 0 hours. And plus, it's kind of annoying if you're an employee, because you might have 80 hours built up through the course of the year that you want to use, and then come January, it goes to 0. Also, it means that all of your employees can only take a lengthy vacation towards the end of the year. So they have to save up the end of the year, and then you're going to be shorthanded maybe towards the end of the year. So those are the kinds of problems that companies run into if they're not really thinking about how to set up their time off policy, and they go, well, I'll use it or lose it, means it zeros in January. It's a good practice not to do that. Use it or lose it means if they accrue 40 hours throughout the course of the year, and then January comes along and they haven't used any and they're going to accrue more, they just can't. They're capped, right? That would be a better way to do it. So just a little bit of advice, if you can set your clients' businesses up that way, it's better. Employees are happier with that. They can take their vacation whenever they want. It spreads out when your employees are out of the office, and basically reduces the burden on all of your other employees to work shorthanded if people take vacation throughout the year. Next, don't include time off in your overtime calculations. As a CPA, I guarantee you all know this, but maybe there's some business owners out there that are listening in, or that will listen in the future. That is a common question for not, most people do know that you're not supposed to, but in case you don't, that's the answer. If you're tracking time off, and if you put 8 hours on the timesheet, and so it's 32 hours of work and 8 hours for regular time, you're not going to include that 8 in your overtime calculations. Don't neglect your overtime policy when it comes to tracking time off. you need to make sure that, as I said, you're not tracking you're not including your overtime, but you're making sure your employees understand the policy. So that's a good thing to keep in mind, explaining it to them and how it relates. Next, don't use your employee anniversary as the accrual anniversary. That's not a good idea. Because then you've got disparate anniversaries for people's accruals all throughout the year. If you can standardize that to a date, a lot of times people like to do that to January 1st, then everybody's overtime policy adjusts on January. That's always a good thing to do. So if you can prorate new employees, that's a good practice. And if you come up with a policy for doing that initially when you set up a company or when you convert a company over to using a new system, that's a great thing to do, because then if you want to make wholesale changes to overtime, and especially if you have 50 employees, right? If you have 5, it's probably not a big deal. But if there's 50 people, you would want to make changes to overtime policy on January 1st as opposed to whatever their anniversary is. So that's always a good thing to keep in mind. And it's also a good idea, if you can avoid it, sometimes this isn't avoidable, but if you can avoid graduated overtime policies, it simplifies your life as an employer as well, which means that offering everybody uniformly 3 weeks a year is better than going in and having to adjust certain employees when they reach, the 5-year or the 10-year milestone and giving them more time as opposed to less time. It's better to just give a raise. People enjoy that extra money, and then everybody's on the same schedule every year. So again, these are not hard and fast rules, just piece of advice that could be used to make your life simpler. Okay, so how do you fix this? Well, we always say automation is gold, meaning that if you can find a time tracking service, timesheets is one of them, but honestly, there's 50 of them out there. So I'm not going to try to prejudice you on any one of them, but if you can automate processes for your clients or even for your own office, you'll find out that you're going to save a ton of money for your clients or your office by automating. And also, a time tracking service will have solved most of these problems using best practices that are just built right into the software. So you don't have to worry about coming up with policies half the time. You just do whatever the software is capable of doing. In other words, it's better to mold into the software as a general rule than it is to try to mold the software to some weird rule that you guys have used for the last 10 years. If you can change it and mold into the software, you're better off, just because most software out there today is built for best practices and it keeps you out of trouble. Right? So automating is where that starts. Now, in order to automate, first, you're going to want to understand the ROI. The ROI, obviously there's going to be less calculation errors. You're going to have standardized policies and stuff like that. But there's a real cash benefit to using an automated service. And so the calculation is really very simple. I've tried to distill it down so that it's as simple as possible. 3 minutes per clock punch in padded time ends up equaling 1 week of vacation per year. Okay, so what does that mean exactly? It means, suppose I come in, like if for instance, let's say we're using paper, okay, in our office, and I come in at 8:02 in the morning or 8:03 or something, and I write down I got here at 8 o'clock. So I've essentially padded my time by 3 minutes. Now, if you're a boss and your employee comes in at 8:02 and writes down 8 o'clock, you're probably not going to say anything, right? I mean, it's just 2 minutes. And you don't want to cause tension over 2 minutes with your employee. But if you do the math and you figure out that 2 or 3 minutes per clock punch, because they're coming in the morning, they're leaving for lunch, they're coming back from lunch, and then they're leaving at the end of the day. And if they pad 2 or 3 minutes, and as you know, as business owners, a lot of times it's more than that. But if it's just that 3 minutes, 2 to 3 minutes, your average is about 10 minutes a day. And if you do the math for 10 minutes a day, that's 50 minutes per week times approximately 49 or 50 weeks per year minus, holidays and these kinds of things. You're basically giving your employee an extra 1 week of paid vacation per year built in to that 3 minutes of padding with every clock punch. And if you're paying your employees $15 per hour on average, that's an extra $600 per year that the employee is earning by not having to punch in real time. And so that's the actual ROI from going from, for instance, from paper to an automated system. And if you have 10 employees, now you're talking about $6,000 a year in savings. Now, a service, I can only speak for timesheets, but a service like timesheets costs, $495 a year if you pay for the year, and you're saving 6,000. So pretty much any timekeeping service that you use, the ROI is definitely there. It costs you less money to pay for the service than it does to not pay for the service and just use time tracking. That's the 30 minutes. Okay, we're almost done. I'll just keep going here and finish up if you guys have any questions. I just want to give you some advice on choosing a vendor. Now, this is not, this would be a vendor like us, and this is general advice for any vendor that you look at, any time tracking vendor, and there's a lot of them out there. So I'm just generalized the advice. The first one is to look at price. Price can range anywhere from $5 per user per month all the way up to $40 per user per month for some of the more complex services out there. Make sure you look at what they're doing and that you're really just getting the service that's right for you. Make sure that you're getting a service that just does what you need and doesn't have a whole bunch of other stuff. Because honestly, if you don't look around, you could end up paying $8 or $10 a month or more, and you don't need to be paying that because maybe you're paying for stuff you don't need. Some services charge base fees. That's another cost where a timesheets company might try to look to add extra revenue. Base fees can range anywhere from $15 on the low end up to $80 on the high end. Some companies don't charge any base fee at all. You should look for a company that fits your economic model. Maybe the company with the base fee has a product that has a specific feature that you need. In that case, you should pay it. But if if you can find a company that doesn't have one, then that's probably your best bet. Next, you want to think about policies. What is that timesheet's privacy, company's privacy policy? You definitely want to look at their terms and conditions. Who, if anyone, do they sell the data to? How long do they keep that data for, and what do they do with it? You want to make sure that they're making a good effort to protect your policy. One good piece of advice is to look for companies that are consistent with GDPR. If you haven't heard of GDPR, GDPR is actually the European policy for data privacy, and a lot of companies like Timesheets and others do business in Europe. And GDPR is a much more strict policy. It's a stricter policy than what you'll find in the United States. So if you find a company that on their privacy policy says that they adhere to GDPR, you can be pretty sure that they have excellent privacy policies in place. And that would be a good piece of advice to follow. So with respect to privacy, definitely look for that GDPR label. Also, you want to talk to a company about their cancellation policy. What happens to your data after you cancel? It's interesting. In 15 years of doing this, I've talked to so many clients. I can tell you, I could probably count on one hand how many clients have asked me about privacy, about cancellation. What happens if I cancel? What happens to my data? Almost no one ever considers that. You should consider it. What does the company do with your data? How long do they keep your data? Do they give you access to that data after you cancel if you want it, right? And those are the kinds of important questions that you should ask. Some companies, the worst offenders, will use the cancellation policy as a cudgel to keep you as part of the service. In other words, they'll say, if you cancel, we're just going to delete everything because you're a canceled customer, and they're totally at liberty to do that. So you should find a company that makes at least allow you to download it at the very least, data portability, right? But you definitely want to make sure you understand the cancellation policy and what that means. And that brings me to data portability. Can you get your data out? If they're GDPR compliant, data portability is one of the tenets of that. So definitely you can export your data if they're GDPR compliant, but that's something that you want to ask. And in what format? It's not enough to know that you can get your data out of the system. You want to know in what format is that data going to come out? Is it going to be useful to me in any way, right? A flat CSV file is a great way to get your data out. Some companies will give you a dump of the data in a database file that's not necessarily any good to you if you don't, it's portable. You can load it into, maybe Access or something, but, it's not going to be easy for you to get to your information. So you definitely want to sort of investigate that. All right, and then next, human factors. do you pay extra for support? Some companies will sell you priority support for an extra, few dollars per user. Other companies, just give it away. Free support, call us anytime. Make sure to ask for that. You definitely want to make sure you have support. If you have payroll and you need to run your payroll and you have a question, you don't want to wait for 24 hours to get an answer because you didn't pay for priority support. And finally, do you like the product? Maybe paying an extra $1 or $2 per month is not such a bad thing if this product has a better human factor to it and everyone likes using it, because they're going to use it and they're going to be up to date on it, and you're not going to have as many edits and changes and things to make on people's time cards. So it's a more important question. Do they like the product? Is it a good product? Do I like using it? Then am I going to save $1 or $2? So that's some practical advice on choosing a vendor. So that brings us to the end of our presentation for today. There's a few takeaways I'll just cover very, very quickly. Know your responsibilities. We talked about that. What laws and things do you need to follow? Simplify your operations to the extent that you can. There's a whole list of don'ts. You might have copied those. I can make the presentation available to anyone who wants it after this if they want that information. And finally, use best practices, and that involves, the basic advice, the translation there is maybe find a company that you can recommend to your clients or use for yourself instead of trying to do things yourself and reinvent the wheel. There's a lot of good companies out there that will help you stay in compliance and with best practices. And with that, I will conclude my presentation for today. Hopefully it was useful and informative. Antonio?
Yeah, Joel, thank you. I like it. I like when a speaker, you just provide an education, you're very objective. And I like the style of like with or without me, with or without timesheets.com. This is what you should be doing, right? This is what you should be aware of. And I think a lot of the audience has been very engaged. We're on live on different channels. So if anybody has any questions at this point, please type them into the question box. Here's a comment. How do I get a hold of you or timesheets.com?
Oh, that's easy. Yeah. Just go to timesheets.com and there's a contact form on the website. If you're an accountant or a bookkeeper and you want to inquire about our Pro Partner Program for referrals to your clients, just look for accountants along the top of the website. But really, just contacting us via the website is the best way to start a conversation with us. It gets us your contact information and we will reach out to you. You can also just pick up the phone and call us. There's an 800 number at the top of the website.
Yeah, and I'm sharing it right now for everybody on the webinar here. Yeah, just timesheets.com, and you could ask Joel any of your questions. But no, thank you for all your experience, your information, a lot of best practices. That's exactly what we need. That's exactly what we need to learn and understand. And a lot of those numbers are very surprising, right? You don't expect so much time to accumulate over a week, over a month, over a year, but that's what happens when you don't have that automation in place. And it's good to keep track of where your money is going basically in your cash flow with that. But thank you very much, Joel.
You're welcome.
Awesome. I'll talk to everybody soon, and we have another webinar planned for next week and the week after, so stay tuned and let us know if you have any questions. Subscribe to our channels and make sure to go to timesheets.com and say hi to Joel and Lindsay and their team. Have a good one. Talk to you soon, everybody.
Bye, everybody.
Bye.